Alright, good morning. Let's go over today's trade plan. So in the overnight session, buyers held ES above that key area of 64.5 to 67. And on the upside, we had overnight resistance at 72.5 to 74.5. And we ended up getting some rotational activity over there. But overall, the buyers held up the market pretty well. And the theme of this market being very resilient and very two-sided continues to be in play. Now on the day time frame today, we do have a potential catalyst, FOMC minutes at 1 p.m. Central, and ahead of that, we can just stay stuck in balance. We can go higher from here. The pre-market resistance level 1874 is important, and pre-market support at 68.5 to 70.5 is important. So as long as we can hold above pre-market support, the buyers still have a shot at moving this market higher. And even in the pre-market session, we've seen that the market has already broken above 1874, and that was a break to a new overnight high. So short term, there is some momentum on the buy side here, and we could be headed up to 77.5 to 80 before we get any rotational activity at this point. But when we get to 77.5 to 80, that area does not necessarily have to be a spot where the S&P all out fails. It's an area that started the directional conviction, the move yesterday. We will likely get some profit taking there on first test, which means it can result in rotational activity. But it doesn't have to be a big failure. It could just be a rotation followed by a move higher up into the naked V pocket 81.5, and then the open gap at 82.25. And potentially even the 85 quarter gap could get filled ahead of FOMC minutes. And following FOMC minutes, we can get some more directional conviction. Ahead of it, the range could be somewhat limited, so we'll have to keep that idea in mind. So on the long side, you just want to be careful that you're not buying too high or too close to initial resistance on first test, because on first test it is pretty likely that we will get at least some sort of rotational activity, and we could get rotation back down to 73, 74, and then balance and then continue higher. So right now on the short side, I think it's best to be cautious unless in real time we're getting a very clear picture that this market is still quite weak. It's good to of course have a plan in place, but at the same time when the market opens, and then if it shows you that there's a lot of weakness, you have to make some adjustments to that, especially in a very two-sided market. It would be different if there was some real directional conviction in this market, and we could just focus on trading in one direction. But this market has been very two-sided. It's very balanced, and at the same time it's very resilient too. So every pullback has been bought so far. So if we're really going to continue higher, and if the buyers are going to maintain control today, then we should not trade below the 68.5 to 70.5 pre-market support. If we do start trading below it, we have that bull bear zone as the final spot at 64.5 to 66.5, but that area has been tested now several times. And the more attempts you have at testing an area, the weaker it's going to get, and the probabilities are going to be lower next time around. So at this point, I think that if the buyers are going to hold it, then we should not revisit 64.5 to 66.5, and if we do, then we have to be cautious on trading that area on the long side now, because it may not hold at this point, and we could head lower. So if we break below 68.5, that would be a warning sign for buyers, and even though we have that support at 64.5 as being very key, just have to read it in real time to gauge whether it's something that could hold or not. I had much more confidence in that level yesterday than I do today. If you break 64.5, that would be a break below yesterday's low, and it would be a break below the previous two-session low actually, and that could then shift the momentum and accelerate the downside activity. So below 64.5, very likely that will at least go down to 59 to 61. And If it's a liquidation type scenario, or if it's happening right kind of after FOMC minutes, then we could even break this recent range. And if we do, that would be a break below a balance, and then you could get some accelerated liquidation to the downside to 53 quarter to 55 quarter, 49 to 50 half. I mean, then it's kind of, wherever the momentum kind of shuts off, that's where the selling can stop. Or if the range gets really exhausted, the selling can stop. But otherwise, it would be a liquidation type scenario that could be in play. Of course, we want to see signs in real time supporting that idea too. So it's not simply breaking below 64.5, but breaking on high momentum and high volume. Those are going to be the key ingredients to kind of, accelerate the downside movement if we're going to get that. Right now, short term, above 68.5 to 70.5, buyers can hold it together, especially above 74. So, right now it's going to be about conservative setups. I think, buying it off the open, even though it could work up to initial resistance, it is a little riskier. You may want to kind of see which way this market's leaning before jumping in. But short term, the momentum is right now on the buy side, and the target is 77.5 to 80, potentially 81.5 to 82 quarter, ahead of FOMC minutes, expecting responsive sellers at the 85 quarter gap, and at 88 quarter and 90 quarter resistance zone above. Those are high odds spots for sellers to be active in this market. Again, main catalyst FOMC minutes, so the morning session could be, more of a non-event and just more balanced and rotational, where pullbacks get bought, pops into resistance get sold into, and it just kind of bounces in a range in the recent 2-day range, and then we get a directional move at 1 p.m. Central. We also have some Fed speakers throughout the morning, so just calls for some caution and something to be aware of. On the volume, relative volume is looking decent in the Russell and S&P, and Q is running a bit light. So, we'll be watching the other markets as well. With NQ, we have some short-term resistance now at roughly 36.18 to 36.21. And if we can break and hold above that area, then we'd be good for a directional move to the upside in that market. On the downside, you want this market holding, and Q, you want it holding above the overnight lows. So 35.95 to 3600 is a spot where buyers can be active in Nasdaq. So let's just keep all this stuff in mind, and just be careful off the open, because of the potential catalyst later today, and take it from there.